Ashish, straight coming to you first because you are the most familiar of the faces. Just if I can have some opening remarks for you about what your thoughts are on active versus passive investing. What have you experienced in your career? What the trends which you are seeing, and so if you can just start up and kick off the session.
Sure. So, I'll share. Thank you very much, Madhu. It's a pleasure to interact with you on this panel. If two or three thoughts that I can share, I think there is a lot of debate. And generally speaking, what I've seen is that there is a lot of polarization, like we see in every nowadays, whether it is politics or the stock market, everywhere there is a lot of discussion about polarization. And even with respect to active versus passive, I see a lot of very hard positions and very binary positions being taken by industry experts as well as participants. I am clearly not in that camp. I personally believe that there is a scope for coexistence. And I'll tell you a few reasons for this. What I've seen is that the moment the discussion about passive comes in, everybody straight away jumps into alpha and beta and the lack of alpha. And, a lot of data starts getting thrown around to basically prove this way or the other that there is alpha or there is no alpha. And people start slicing and dicing different market caps and different time horizons, and data starts flying all across. I personally think that before jumping into alpha beta kind of serious hard discussions, according to me, one of the big reasons for passive to come up is actually got to do not with, at least in India, it's not got to do with the absence of alpha really. In fact, I think it is because of simplicity and convenience. Because if I see specific to India, I have always said that there are 300-400 companies which are worth buying. And to buy those 300-400 companies, we have some 2,000-3,000 equity funds. And our industry makes life very, very difficult for mutual fund investor to pick funds. And I find a lot of investors have 20-30 different schemes in their portfolios. So eventually they are buying market. And I think sometimes passive funds play a great role. Nowadays there are a lot of investors who are digital first and they're DIY. So if you're just entering the industry, if you don't know what to buy, the least you can do is buy the market. Very easy to do it, especially if you are a fintech participant. So my sense is that the scope for passive is actually because of simplicity and ease of execution, very good for novices and first-timers. On the other hand, if we really want to talk about alpha, I just put it in one sentence that if you look at India as a market, I think we should not worry about index capturing the market before the market has even captured the economy itself. A couple of years back, we didn't even have any insurance companies listed. We didn't have any AMC listed. The first insurance company has come in the index, I think only a few weeks or few months back. So very, very long journey. I don't think the index in any manner captures the market because the market itself is not capturing the economy as of yet. So I think very early to take hard positions, but I can see a coexistence pure because of simplicity.
Madhu, thank you for including me in the conversation. And what I would say is I would really echo many of Aashish's opening comments. First and foremost, as it pertains to what is often framed as a very binary discussion, active versus passive, in the polarization that ensues. What I would say is that oftentimes that's a false premise, that this is a very digital discussion that we should be having, that fundamentally all investors are active investors, and active exists on a continuum of degrees of activity. So there are investors that lean more towards passive. They may own index funds and tend not to look at their portfolios that often, not tinker with them that often, to rebalance every so often across different asset classes, different regions. And there are other investors that are very deeply involved, that are keen investors that might get down to the level of individual security selection. So I think first and foremost, we need to reframe this debate as not being binary, but being a digital debate, and recognizing that at the end of the day, we're all active investors. And I think the key elements of sort of simplicity and ease of access that are offered by index funds have been key elements of appeal to investors around the globe when it comes to just simply getting market beta. because market beta at the end of the day is what does most of the heavy lifting for investors in moving their portfolios in the direction they want it to move, which is upwards and to the right over time. Everything else for an investor really at the end of the day is gravy. It's aspirational alpha that might actually be real and material or might be real and materially negative depending on how savvy an investor you are or how savvy those investors that you've hired through actively managed funds to invest on your behalf. So there's a lot to discuss here, obviously, and I'm looking forward to digging in with everyone.
Madhu, when you were there in the industry, such debates never happened, right? Because the alpha was so large. We had, so a couple of days back, we were talking to a global client who wanted to evaluate India. And we were showing him the journey of last 2 decades of one of our oldest fund, which has a 24-year history. The alpha over 24 years is around 6%, but the alpha in the first year was 9%. So the obvious question from him was that the alpha in the second decade has started coming down. And since you provoked me to, have a different stance, I definitely feel passive will emerge fairly fast as we progress ahead. As we speak today, around 40 lakh folios have opened up in the passive space. So far, the passive space has largely been dominated by the EPFO money, but individuals are also now recognizing that before we aim to beat the market, we should first meet the market. In the attempt to beat the market, we end up not even meeting the market more often. And there are very obvious data points and reasons for that. So I think the space will emerge large. On days when I am in a mood of, some ego, I feel that we definitely will be benchmarks. Why can't we be benchmarks? Because if you take out the weak companies of the benchmark repeatedly over time, then alpha is a short bus. And, I would take my alpha as my birthright. And there are days when the market will humble you, where you realize, I wish I had some exposure to Nifty and Nifty Next. And I'll just give you some data points because this is an audience with data points. Data really helps you in bringing down a lot of these illusions and ego. Data tells me that if we just do a combination of Nifty and Nifty Next, and these are the two most scalable indices, forget everything else. Baki sab mein, it's very difficult to build an index portfolio. Just a combination of 50-50 of these two portfolios would have taken the investor into the top decile of active funds in the large cap and the multi-cap universe. So if you want to be an investor in the top side, one part of your portfolio with this combination over the last 16 years, I have data for the last 16 years right now, and it won't look too different if we take it for the last 5 and 10 years. So I think it will become a very critical part of the core. Having said that, I also feel there will be few managers who will deserve alpha, who will create alpha, but there will be very few. There will be that, it won't be a standard bell curve. There will be a power law that very few managers will be able to generate alpha wherever they're able to have a temperament, discipline, and skill sets. And I think it's going to be a very challenging phase for all of us in the industry. We will have to earn our alpha. We'll have to earn, the right to say that the past 2 decades of alpha of India can be extrapolated in the future. I come from a camp of not taking it for granted. I come from a camp of being paranoid about it, that alpha is fleeting. We have to work hard. We have to, constantly keep strengthening our approach of fundamentally ordering our temperament to deserve alpha, which means a certain orientation of long-term, an orientation of sometimes being contrarian, sometimes accepting how the market is. So that's my take. I start by saying passive will grow. I also start by adding that in my personal portfolio, I don't try to have the or word. I always have the and word. And just to add proof to it, as of now, 7% of my equity portfolio is in passive funds. As trend progresses, I will, take a call, what should I do? And last point, whenever in a calendar year, active funds, my portfolio does very well. In that year, I invest in a passive fund. And likewise, at the end of a year, when Nifty has done very well versus some of my active funds, I would allocate more to an active fund. So you keep playing the, reversion to mean that keeps happening. As a framework that I have felt appropriate for my investing. I just wanted to give proof of concept so that my theoretical words have some outcome.
How would you like to, kind of create an index fund? And they said, do you want to take my job? That was the kind of reaction I got. But today, those same guys are saying, okay, what is the kind of idea I can get for a passive product? Today, if you see, India has around 99 products. We have we are nearing 40 billion US dollars in assets under management in the ETF space. This is actually a 10-year growth of nearly 40%. And if you look at it globally, of course, the numbers are much larger. Global passive space is almost at around 8 trillion. But the 10-year CAGR has been around 18%. So definitely India is galloping at a much more faster rate at passive. And I think even if people want to, deny that, this is not a trend, which is not actually the case, it is. And the surprising part is that last year has seen a surprising uptrend in the acceptance of passive and the interest of passive, not only in creating local products, but also creating an option for international indices. I mean, as India, you're aware that they have a tremendous home bias. But we are seeing that shift happen as well. And, as, Aashish kind of spelled it out, it's simplicity, for a lot of, our markets where people need more financial awareness. That this is a space which one can easily jump onto because an index, based investing, it's transparent. You have all the information there. It's rules based. And I think it's very easy for you to access, like, they said market beta. And it's very, very simplistic understanding for people, even from the mutual fund industry. It's come a long way. But today, if one has to look at mutual fund industry, you see this long stream of schemes and you get completely confused as to how do I filter through? Unless today I have the background and I understand there are so many schemes that I sometimes get overwhelmed. But yeah, it's easy. Even the last 1 year, we did a small little research where we said, okay, if I invested in the Sensex and say the S&P 500 as a combined portfolio, not weighting it equally, but in a rebalanced format, the combined portfolio was actually giving higher returns than individually each of these indices, and also a lower volatility. So I think passive is something that is coming to the forefront for Indian investors. And I think the more knowledge and awareness that one can create about it, it's more, it's better. And I agree. It's not an active versus passive. It is active and passive. So I always propagate core satellite. So it depends on who has a bigger conviction on passive can go as core passive. And if you have a higher conviction as active, you can go core active. So, this is, I think, a debate. No longer, I don't think so we can call it a debate. I think it's how we adapt both the processes, both the options rather, to include it into your portfolio as part of your portfolio strategy.
Definitely a lot of excitement from an active investment perspective. It may not be as good as it was in the last 20 years, but I'm sure there is still a lot of alpha in the next 10 years. So from an investor perspective, one thing is for sure, world is going to get more and more complex. So much information with so many funds, active, passive, so many mutual funds, hedge funds, long short funds, commodity funds. So you will certainly need a proper advisor to advise you, because this is a specialist subject. This is not a thing which you can one day get up in the morning and say, but I want to invest here. You need a proper handholding. You'll need proper asset allocation, and you'll need a good advisor to advise you on your investments for the next 10 years. So thank you very much once again to all of you for joining me today.